night, I've been telling you about the best way to approach investing from a long generational perspective. How to manage your money when you're young, when you're middle-aged. Hey, when you haven't you heard 60 is the new 50? And even once you've retired. But there's another aspect of generational investing that I really got to stress here, and that's the need to get your kids interested in managing their own money more generally and learning about the stock market in particular. I say this to parents with children of all ages. While I love the public school system, you simply cannot rely on the public schools, or even these ritzy private schools for that matter, to teach your kids about money. Okay, they can do a bang-up job with English, history, biology, chemistry, physics, calculus, whatever. You want your kids to become fluent in a foreign language? Great. The typical high school can teach you French, Spanish, and more of these fancy ones. They teach you Chinese. However, if you want your children to become fluent in the language of finance, you're going to have to do it yourself. I get the sense that personal finance is viewed as being too simple, too quotidian, so to speak, for most educators to even bother with. It's like beneath them. Your typical high school health class will help kids learn how to put a condom on a banana. But nobody's going to explain why it's dangerous to maintain an outstanding balance in their future credit card bills. And believe me, you can't wait until after your kids go to college to teach them this stuff. Because at most institutions of higher education, students get bombarded with credit card offers that can seem irresistible if they don't know any better. I took down 5 of them. Throw in thousands of dollars of credit card debt on top of their student loans, and they could be in the hole for decades, which in many cases means you, the parents, will need to bail them out. We don't want that. Yet raising financially responsible children isn't just about being a good parent. It's about not getting hit up for cash every month, even when your kids are well into their 30s. That's why if you want your children to learn about money, and what parent doesn't want financially responsible children, then at this point, you need to do it yourself. That means you need to have some long, boring conversations about the dangers of high interest rate debt, like the kind anyone can easily rack up on a credit card, and the need to save money coupled with the power of compound interest for generating wealth, like we talked about earlier. But in my view, the best way to make all this dull personal finance medicine go down is with a spoonful of stock-picking sugar. In other words, starting at a fairly early age, I recommend giving your children gifts of stock in high-quality companies that resonate with young people. My classic example here, I've been using it since the show started, is Disney. Give them a couple of shares a year for the holidays, starting when they're old enough to appreciate the big movie franchises, Frozen, Star Wars, whatever. And because Disney has so much going for it, so many blockbuster films planned up over many, many years in the future, not to mention a terrific theme park business and solid television properties, by the time your kids are teenagers, I think their Disney holdings will show a nice gain. There is no better way to demonstrate the power of saving money and investing in stocks than having your children actually make money in the stock market themselves and follow it along. And look, as much as I like Disney, you don't have to go with Mickey Mouse. It could be any high-quality company that will resonate with somebody who's still in elementary school. Here's the bottom line. The point of getting your kids interested in stocks early is simply that you need to teach them a better way to think about money. Rather than viewing cash as something to be spent, you want your children to learn that money is something that can be saved and invested to create still more money at the earliest possible age. And look, if you don't want to do this for your children, do it for yourself. Because kids who can manage their own finances are kids who won't be begging you for moolah even after you've gone into retirement. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.